board. You know, folks, for months I've been talking about planting mustard seeds that will grow into a mountain of recovery. Well, guess what? The buds are blooming here in the spring. Recovery is coming very soon. Look, today's pending home sales went up again. That's huge. We'll put a picture up on the board. In fact, we might give you a couple of pictures. The entire housing sector probably bottomed in January. Jobless claims are falling. Consumers are spending. Manufacturing orders are rising. The swine flu has peaked. Look at those transportation stocks today, hot as a pistol. The Fed is easy. The Treasury curve is positive and will remain so. And you know what? This point made Friday night by our pal Jerry Boyer. If higher tax rates are indeed coming next year, you want to invest now while the rates are still low and the after-tax returns are still high. There could be a rush into stocks in the second half of this year. It may not last forever, but right now it is the big story. This thing will not stop. The S&P in the green year to date. Let's bring in our market experts. Here's the trillion-dollar man, Robert Dahl, Vice Chairman and Global CIO of Equities at BlackRock. Peter Schiff, President, Euro-Pacific Capital, and Ned Riley, Riley Asset Management. Ned, I want to go to you because I got to ask you, look, commodities hot, banks hot, transportation's hot. You know what one I love, Ned? For all the beaten down in the housing sector, which has been perfectly awful, I'll grant you that, as the numbers now begin to bottom and turn up. Home builders up 10% today, Ned. Home builders up 84% since the bottom in early March. Your thought, what do investors do? Should they get on that train, Ned?
Yeah, they do, Larry. They have to get on the train because clearly, in my judgment anyway, this economy has turned. And I said it a month ago. I said, watch out for the housing area because that should be the leader in the group. And we're seeing it happen. Money is now starting to flow not only into the economy, but flowing into the markets as well. And you and I agreed a couple of months ago to say, hey, that's going to come as soon as people realize that rates are down to 4 3/4 on mortgages, short rates aren't paying you anything to stay in there for security or safety. And what I really like about the market, Larry, financials are leading. I don't care what comes out on Thursday. The market's already discounted the majority of that. And the market is still extremely cheap based upon what I call a 5-year moving average of earnings. And bottom line is, I'd still buy today.
All right, buy today. That's very important. Bob Dahl, let me come to you. Did I mention cheap gasoline prices? The whole energy tax cut is yet another powerful mustard seed. And the stuff that should be happening is happening, Robert. This is what I like about it. As Ned said, financials leading the way. And then followed by classic cyclical indicators, right? Materials, industrials, consumer cyclicals. Let me add transports. I think this swine flu business has definitely peaked out. That seems to be the story. Transports recovered. They had a gigantic day today. What's your take? Is it lasting? Is it durable? Should people rush to get on this train?
People are rushing to get on the train, Larry. There's no question about it. People are covering their shorts, and a lot of people have a lot of money in cash that looked great getting no return when stocks were falling, but now that money's burning a hole in their pocket, and they're trying to catch the train as it's leaving the station. The green shoots continue to multiply, as you say. It won't be a one-way street. You and I both know that, but we have seen the lows.
By the way, Elaine Garzarelli came out with a big bullish piece today. I think a lot of people still follow her, Robert. And I want to ask you, where are you going here? In other words, if you buy into the rally, we'll get to Peter Schiff in a minute, who's going to have a different point of view. Where do you go? Do you buy the stuff that's cheap, or do you stay with the cyclical, pro-recovery, economic-sensitive growth stocks?
I think this will be a rotational move to the upside. We've seen the down and dirty and dead come back to life, the lowest quality names. We've seen the cyclicals join the way. Before this is over, technology will broaden out. We'll even have healthcare join in before it's over, I believe.
All right, Peter Schiff, let me come to you. On the other hand, let us be very realistic here. We saw Obama blasting large corporations, international corporations, wants to raise their taxes. He's waging war on capital. He's breaking the bondholders' contract law, which can't be a good thing for the entire free market economic system. Alan Meltzer, a very distinguished academic and Fed watcher, has a big piece in the New York Times today saying inflation is on the way from lousy monetary policy. Do you throw yourself into that camp?
Well, you're 100% right with what you just said. But where you're wrong is making the leap from thinking that higher stock prices means the economy is about to recover. Look, stock prices are rising all around the world. In fact, the U.S. markets are substantially underperforming. What we're actually seeing is a flight from cash because of all the inflation. And ironically, strong global stock markets is actually a big negative for the U.S. economy in the short run.
How can that be, Pete?
Because as investors want to buy stocks and stocks become more appealing, treasuries become less appealing, dollars become less appealing, and so what happens is we get higher consumer prices and higher interest rates in a recession.
But wait a minute,
and that's going to compound the problem.
I agree with you that treasury rates are rising. Now they are, let's see, they closed today, the 10-year closed at 3.16. The low at the time of the Fed meeting when they announced bond purchases was 2.5. Actually, we're up from 2% more or less. But Peter, I got to disagree with you. I think the history suggests that Treasury rates going up along with stock prices. People are moving out of the riskless stuff and they're going into riskier stuff because corporate bond prices are falling, Peter. So I got a challenge on that.
Well, look, I think for the short term,
corporate bond prices are rising, rates are falling, and, you know, that's good for future profits. That's a good indicator. I want my corporate rates to be falling even while my Treasury rates are rising.
Yeah, but Treasury rates are not going to just rise. They're going to surge. They're going a lot higher, and the dollar is going a lot lower, and this is going to undermine the economy. This is not just Treasury rates going up from 3% to 3.5%. We're going to go to 5%, 6%, 7%. They're not going to stop. I mean, wow. and the economic contraction, we've been spared the worst of it because the world has flooded into our bond markets and flooded into our currency, so we've been able to borrow trillions. But when the world understands that the global economy isn't as weak as we painted it, and they want to invest in their own economies, they want to invest in higher yielding assets, the supply of credit dries up for the United States.
All right, I don't know about that, but I hear you. I want to ask Ned Riley and I want to ask Bob Dole to react because I want to read you a couple things. Just in today's rally alone, Asia up 5%, Latin America up 7%, China up 5.5%. Rebecca Jarvis noted that the stats coming out of China are improving, especially the manufacturing stats. I mean, you've had this rise in emerging markets, Ned. That usually means the global economy is picking up. We've seen a little bounce from Dr. Copper and other commodity prices means the global economy is picking up. So I want to get your response. What is your rebuttal to what Peter Schiff is saying?
Well, first of all, Peter, I kind of disagree with you in this inflation issue. I was back in 1978 to 1980, and wages and salaries and inflation were going up at 10 and 11%. We have still a very high unemployment rate, and wages and salaries and benefits in the United States account for 70% of our cost structure. It's not commodities that's going to create the inflation, and I don't see a lot of jobs being created yet in this market.
You're right, we're not going to get jobs. But the Fed creates inflation, not commodities, not labor. It's money printing. And that's what's going on. We're talking about trillions of dollars of money being created out of thin air by the Federal Reserve. And as foreigners don't want to buy our bonds anymore because there's more attractive alternatives in their own economies, that's even more money the Fed's going to print.
Peter, I've heard that argument before, but foreign participation in our Treasury has been growing, not contracting, even though interest rates have come down. You've seen that happen already.
In the past, but it's going to contract in the future. We can't rely on that indefinitely. In fact, it's already slowing down. I mean, it's not growing like it was.
Robert Dole.
I know, but the point I've got here, just one more point here, Larry.
Go ahead, Ned.
The point is simply that we've got a long way to go in this bull market, whether it's domestically or internationally. We've come down so hard, so fast. It's been painful for everybody. And just one point. We have had a 10-year bear market in stocks in the United States. We've had a 5-year bear market in stocks in the United States. We've seen a 25% recovery in the market. Hey, and we're only halfway back to where we were.
Almost 35%.
Yeah, 2 years ago.
You know,
but we're still in that bear market.
The small cap index, the S&P 600, is actually up almost 50% from the bottoms. The S&P 500 is up almost 35%. Robert Dole, though, let me ask you this. Now, look, you're a veteran. You've been around. You've seen the ups and downs. You can have bull markets and bear cycles, which is, I think, more or less what Peter Schiff is arguing. What about the tax threat? You heard President Obama today. Now, as he was speaking, and as people took a look at Secretary Geithner, who is not really the best guy to put up there on the screen regarding tax cheating, okay? As all that was going on, stocks dropped 40 or 50 points, but they did come back impressively to the close. Bob Dole, If taxes are going up on businesses next year and the year after, and capital gains, and dividends, and upper-end successful earners, does that put a cap on the rally? And in particular, does that mean better to buy now and then sell when the higher tax rates come into play next year?
Absolutely agree. Taxes make a huge difference. Let me quote from somebody named Larry Kudlow writing about Jack Kemp today. We need to stop taxing saving, investment, and business 2, 3, and 4 times. Simplify the tax code. Without it, there will be no new jobs, and jobs along with economic growth are the best anti-poverty weapons we have. You said it.
Well, I appreciate that read, by the way, and look, you're sitting on a big pile of investment money, so it's not that easy. You can't just turn on a dime, everything in, everything out. How do you play this? I mean, this is a vexing problem, and we've seen President Obama, just blasting. He's breaking the contracts for the senior bondholders. He's attacked investors. He's attacked banks. Today he went after international corporations, who I might add are not tax cheats. They are abiding by the law. If you want to change the law, fine, but it's not like you can throw them all in jail. So what do you do? What percentage of your assets get invested long in this thing, knowing that some pretty bad tax hike news coming down the road next year?
Well, it's not just tax hikes, but I have to agree with a couple of things Peter said. We still have a consumer that has to deleverage. We have a government that's gotten very involved in everything that we do. This is going to prevent growth from being what it would normally be, in our view, in a recovery. We're going to have a subpar recovery. And therefore, you can't ignore some of the defensive stocks. I mentioned healthcare. I think that there are names in the energy sector that deserve attention as the world continues to grow.
There is no recovery. The government is making sure there's no recovery. If you need to invest abroad.
But you know what? I want to ask you, Peter, and I want Ned to weigh in, then we got to get out. You guys have been great. Look. This could be one of these buy the rumor, sell the fact. In other words, suppose GDP jumps up 4, 5, 6% in the second half of this year because of all the easy money, which, Peter, you hate, and I'm not crazy about myself, although I do like the upward curve. Is this a buy the rumor, sell the actual? When that Larry, GDP starts roaring, Peter, and the interest rates on treasuries and maybe other things go up, is that when you buy? Is that Larry, the buy signal?
Larry, if GDP is roaring, it's only because they're underreporting inflation. It's all going to be nominal gains. The U.S. economy is going to keep contracting, and because of what Barack Obama and Congress are doing, they are not stimulating the economy. They're stifling the economy with excess government spending and excess regulation.
They're stimulating government. They're stimulating government.
There's a bull
market in the government. If you could buy shares in the government, I believe that's called paying your taxes. Ned, I'm going to give you a last word on this. Do you buy it now and keep buying it through the summer as we march towards 10,000 on the basis that the recovery is coming? And then if you actually get a V-shaped recovery in the second half of the year with higher taxes coming in next year, maybe this is a sell sign later this year.
I don't think we've gone far enough, Larry. It's a V-shaped recovery as far as I'm concerned. And when you see a V-shaped recovery, one thing to remember, leading indicators are rising coincidental with the market. That's a rare occurrence. Particularly when you look at summers, it's the old sell in May and come back in October kind of routine. I think it's going to be the other way around. This summer's going to be hot.
All right, so hot summer. So I'm going to ask this question of everybody, just one word. Buying or selling tomorrow morning, Ned Riley?
Buy.
Bob Dole?
Buy.
Peter Schiff?
I'm buying abroad. I'm not buying in America.
Okay. Robert Dole, Peter Schiff, Ned Riley, you're all terrific. Thanks for your great contributions. Coming up, President Obama.